everyone and welcome back to our YouTube channel. Recently, SEBI's chief made a statement saying that alternative investments like REITs, InvITs and municipal bonds will become as big as the equity market in the next 10 to 15 years. When considering options for investing, investors typically think of the most obvious choices, either stocks, bonds or cash. But there are more options in the market apart from these standard choices. The world of investments can be classified into two groups, traditional investments and alternative investments. The traditional investment category includes the big three, stocks, bonds and cash. Stocks. It represents ownership in a company and has the potential for high returns. However, they can be volatile and you might lose money if the market dips. Bonds. They are like loans to companies or governments that offer regular interest payments and are generally less risky than stocks. However, their returns are usually lower. Not only that, but they are also sensitive to interest rate changes which can affect their value. Cash. They are short-term investments issued by financial institutions offering a stated interest rate paid to investors and are fairly of low risk. One of the common cash equivalents is the savings account, which gives us small regular payments on our cash balance. There are fixed deposits, which are one of the popular investment options available in the market. There is no real risk of a capital loss. However, the drawback again here is that it offers lower returns with a fixed lock-in period. Now, the risks associated with this are that stocks are very risky and can either double up your investment or double down your investment. When you invest in bonds and cash equivalents, because they carry less risk, the returns are lower too, which might not be sufficient to fulfill your financial goals. These three put together make up your traditional investments. With these investments being shaky in nature, there are alternative investments that provide stability in returns, and your investments are also backed up by secured assets. Introducing the world of alts, or known as alternative investments. So what exactly is an alternative investment? Now, there is not one definition to this, but in simple terms, it means any investment that is not in a long-term position in traditional investments, as mentioned earlier, is termed as an alternative investment. This definition is vague as alternatives come in all different shapes and sizes. To conceptualize this, alternatives can be split into several main groupings. Real estate. Investing in real estate involves the purchase of physical, commercial or residential properties either directly or indirectly through publicly listed REITs. Real estate can serve as a hedge against inflation and offers the potential for income through rent and capital appreciation. Commodities. They are categorized as tangible assets which mainly consist of natural resources like agricultural products, oil, natural gas and precious metals. These assets serve as a safeguard against inflation since they aren't influenced by the fluctuations of public equity markets. The value of commodities is directly tied to supply and demand dynamics. Increased demand leads to higher prices, translating into profits for investors. Private equity. It refers to direct investment made in private companies by pooling in money of individual investors. From this pool, the money is used to purchase both large and small companies. Hedge funds. It is a form of partnership between a managing partner who handles the fund and the limited partners who contribute capital, but leaves the day-to-day decisions to the managing partner. They use a wide range of strategies to earn above average investment returns. P2P lending, also known as crowd lending, enables individuals to obtain loans directly from other individuals, cutting out the financial institution as the middleman. It's established in the form of a fintech platform that allows people to lend or borrow money from one another without going to a bank. Right now, these are seen as the big alternative investments. But there's one particular type of investment that's really catching investors' attention. SDIs. Securitized debt instruments are bonds that are backed by receivables. They're often bundled debts or loans. In this process, multiple types of loans are collected and pooled together in one bucket to create a debt product and securitized to be listed on the market. Everyone who invests in these securities will receive income from the underlying assets. Apart from these, there are other asset classes such as cryptocurrency, art and collectibles, venture capital, and many others. Now that we know the various types of asset classes available in the market, let's examine how big is the alts market. In the past 5 years, the industry has experienced a remarkable annual growth rate of 26%, resulting in an impressive assets under management of 13.74 lakh crores. Let's take a closer look at the different types of assets that are powering this market. Category 1 funds. Investing in startups and early stage ventures grew by 10% to reach 58,929 crores. Category 2 funds, with a focus on real estate, private equity and distressed assets, accounted for the largest share, growing by 34% and reaching Rs 6.94 lakh crores. Category 3 funds, involving hedge funds and complex trading strategies, reported an 18% annual rise, totaling 80,900 crores. The increasing income levels in India have expanded the accessibility of alternative investments to a broader spectrum of investors. If the same pace of investments continue in a favorable condition, the market is expected to grow to Rs 43.64 lakh crores by 2028. Now speaking on a global level, alts AUM totaled $13.7 trillion in 2021 and is projected to reach $23.3 trillion by 2027. From this, venture capital leads the way as the fastest growing asset class. It is forecasted to rise from $1.46 trillion to $4.17 trillion by 2027, followed by infrastructure and private debt. Now, who are these people putting their money into alternative investments, which is causing this market to grow significantly? Let's find out. For a retail investor, only 5% of their capital is allocated to alts from their entire portfolio. But amongst HNIs and UHNIs, it's a whole different story. Here's how these two groups of wealthy investors have distributed their money. HNIs with a net worth of at least $1 million have invested 26% of their assets into alternative investments. UHNIs with a net worth of at least $30 million have invested 50% of their assets into alternative investments. This is a great example of why it's wise not to put all your money in one place. One of the main selling points of alternative investments is that they're a way to diversify portfolios to avoid stock market volatility, and they can offer a hedge against inflation. But what makes alts really attractive to investors besides diversifying risk? Enhanced returns. The potential profits provided by alternatives have attracted investors. Alternative assets have the potential to generate substantially larger returns than conventional investments. Some of them even offer monthly payouts, enhancing the change of liquidity. Protection against rising inflation. Alts such as asset leasing, real estate, commodities, and infrastructure projects may offer protection against inflation. Unlike traditional fixed income investments, which may lose value in an inflationary environment, these alternative investments may be able to maintain or even appreciate in value. Tax benefits. Lower tax rates. Depending on the form of investment, the long-term capital gains tax on alts is either 10% without indexation or 20% with indexation. Tax deductions. These are available for investments made in specific types of alts, such as infrastructure funds under Section 80C of the Income Tax Act. But like any other investment, even alternative investments have their own set of risks. Illiquidity. Many alternative investments such as private equity and certain hedge funds can't be easily bought or sold. They often have a lock-in period, which means investors can't get their money out until a specific time, making it difficult to access funds when needed. Higher volatility. Alternative investments, especially those tied to commodities and hedge funds, can be more volatile than traditional investments. Changes in the market, global events, and other factors can cause their value to swing significantly, potentially leading to big gains or losses unless the investment is backed by an actual asset. Limited information. Alternative investments often involve complex structures and strategies that can be hard for individual investors to grasp fully. Plus, it's often harder to find reliable information about them compared to regular investments, making it tougher to research and decide whether to invest or not. But there's a very interesting asset class that has shown phenomenal returns on investment. It is forecasted that investments in this sector will rise to $3.4 trillion by 2030. The renewable energy sector is definitely soaring high. But what drives investment in renewable energy resources? According to Harvard, sustainability efforts not only help the environment and society, but also makes businesses more successful. Let's look at some examples. Adani is building the largest renewable energy project that will be visible from space. The estimated cost is at least $2.26 billion, and when completed, the project will be about as large as Singapore. Tata Power Renewable Energy Limited invests 70,000 crores in renewable energy projects that will be located over 50,000 acres of land in Tamil Nadu. This initiative has the potential to generate 3,000 green job opportunities. NTPC Group has totally installed 73,800 megawatts of renewable energy capacity. Aiming for long-term sustainability, NTPC targets to have 60 gigawatts of capacity by 2032. You may be curious about how an ordinary individual can invest in such a capital-intensive sector. Well, there are platforms available that offer investment opportunities in solar and wind projects to retail investors with a minimum ticket size. SustVest is one such platform creating a bridge for retail investors to walk the path of sustainability with effortless entries. Investing a chunk of your portfolio into this sector doesn't just make you money, it also makes a difference for our planet. In my opinion, it's the ultimate investment because you're not just earning, you're also contributing to saving our planet. If you found this video informative, don't forget to like, subscribe, and hit that notification bell for more financial insights.